Alright, welcome to the recorded lecture for accounting for depreciation. Okay, so the accounting for depreciation is related to what we call matching principle. Okay, in matching principle, whenever you incurred costs, you earned income, you have incurred costs or cost. Okay. So what we do in depreciation is we are allocating certain costs of the tangible assets or tangible asset over its useful life. Okay. Obviously, it's hard to determine how much we had consumed for the tangible asset. Okay. So what we do as accountants, we use different methods to allocate the cost that we had consumed or our company had consumed for the tangible asset. Terms that will be important to be remembered: property, plant, and equipment, or PPE, that is the tangible asset, which can be used for more than a year, also called fixed asset. When you say cost, that is the capitalized cost of property, plant, and equipment. Depreciable cost, that will be the amount that will be subject for depreciation. Residual value, that is the estimated value of the PPE at the end of its useful life, also called salvage value. Estimated useful life, that is the number of months or years the PPE is estimated to produce the expected benefits. Expected units of production, that will be the number of units the PPE expects to produce. Depreciation expense, that is the portion allocated in setting the value used for PPE. And then accumulated depreciation is a contra asset account, which is used to record depreciation charge on the PPE. Okay, we have four methods in depreciating the tangible asset or the property, plant, and equipment: straight line method, diminishing balance, units of production, and sum of the year's digits. Okay, so we have a sample problem here. Okay, so we have an equipment that purchased at the beginning of the year, $110,000, and then it is estimated to be useful for 5 years. And with expected production capacity of 1 million units. The residual value at the end of its useful life is $10,000. The following also provided for us to determine how many units were produced. Okay, so in 20x1, 20x2, 20x3, 20x4, 20x5. Okay, so we have the units. Okay, so it is asking us to determine the depreciation expense for 20x1 to 20x5. If we use straight line method or diminishing balance method or units of production method or sum of the year's digits method. Alright, straight line method, we have the cost of $110,000. We will deduct residual value to determine depreciable cost of $100,000 and then divide by 5 years. So the annual depreciation will be $20,000. So when we do the journal entry, for the adjusting entry, we have debit depreciation expense and then credit accumulated depreciation equipment. Okay, so take note that the annual depreciation expense will be the same if depreciating for a year. So because we purchased it at the beginning of the year, 1st January, so 31st December, that is 1 year, $20,000 for 20x1 or year 20x1. For year 20x2, it will be the same until it reaches 20x5. Okay, so if you're looking into the ledger account, it will be like this. Okay, so accumulated depreciation equipment, we have 31st December 20x1 till 20x5. You can see that the balance remains, the depreciation charge remains the same. Straight line method also, sometimes they will say the depreciation is allocated evenly. Alright, in diminishing balance method, we have to determine first the rate or the depreciation rate that we will charge. The rate will be 1 less nth root of R divided C. So N will be estimated useful life, R will be the residual value, and then C will be the cost. So we already have determined the estimated useful life. Then we have residual value, $10,000, and then C will be the cost. Okay, so when we calculated it, the rate that we got is 38.1%. So what you will do, you get the original cost, $110,000, and then you multiply it by 38.1%. Okay, for 20x1, for the year 20x1. So in this case, your annual depreciation for 20x1 will be $41,910. So $110,000 for the original cost, less the depreciation charge for the year. Then you can determine $68,090 as your carrying amount at the end of the year. That $68,090 you will be carried forward, and that will be the opening or the beginning balance. Then multiply by 38.1%, you will have 25,942. And then get the difference between $68,090 against $25,942. Then you will have $42,148. The process will go on until the last year of the estimated useful life. As you can see here, the opening balance on 20x5, that will be $16,150. Remember that we have a residual value of $10,000. So we have to ensure that we will have that $10,000 at the end of the estimated useful life. So get the difference between $16,150 against $10,000, we have $6,150. So the adjusting entry for 20x1, debit depreciation expense, $41,910, and then credit accumulated depreciation equipment, $41,910. But on 20x2, unlike in straight line method, which the depreciation charge will be the same for each year, as long as you purchase it at the beginning of the year and then trying to adjust at the end of the year. Okay, here the depreciation charge is quite different. This is based on the table that we have prepared from the previous slide. So debit depreciation expense, $25,942, and then credit accumulated depreciation for the equipment, $25,942. Okay, so the next method we have units of production method. Okay, so what we will do for units of production method, okay, so we have to determine the rate. So we have depreciable cost divide total expected units of production. So the total expected units of production will be 1 million units. So that is our denominator. So $100,000 divide 1 million units, we have 10 cents per unit. So in 20x1, we produce 180,000 units multiplied by 10 cents. Annual depreciation will be $18,000. For 20x2, 150,000 units multiplied by 10 cents, we have $15,000 as annual depreciation. Okay, and so on and so forth. As you notice, the accumulated depreciation in this case, $100,000 during 20x5 or year 20x5. So to journalize the first year depreciation for when you use units of production method, so debit depreciation expense and then credit accumulated depreciation, $18,000. Alright, so the last one, sum of the year's digit. Okay, so you have to determine the denominator here. Okay, so sum of the year's digit, we can see the formula there, and okay, open parenthesis n plus 1 close parenthesis divide 2. So calculating that one, you will have 15. That will be the denominator. So your numerator will be the number of years the DPE still useful. Okay, so in 20x1 that will be 5 years, 20x2 that will be 4 years, 20x3 3 years, 20x4 2 years, and then 20x5 1 year. So 5 for 20x1, 5 over 15. So 100,000 multiplied by 5 divide 15. We have annual depreciation of 33,333. You can see in 20x2, 100,000 depreciable cost multiply by 4 divide 15. We have 26,667. And the calculation will be continuing like that. So to journalize, debit depreciation expense and then credit accumulated depreciation equipment, 33,333. Alright, so if we compare the annual depreciation of each for all the methods, you can see straight line method, constant rate for 1 year, for every year. Diminishing balance, you can see the depreciation charts diminishes. Units of production, it fluctuates depending on the number of units that they produce for the year. And some of the years digit declines, depreciation charge declines. And you notice that they have the difference. If you want a fixed rate, of course you will wish to have straight line method. If you want to charge a higher rate at the beginning beginning of the year, or beginning from the initial years of the property, plant, and equipment, either you use diminishing balance or sum of the years digit. If you want to base your depreciation against the units that you produce, then you use the units of production method. And then finally, we compare the accumulated depreciation. Okay, so of course it will vary, because if you compare these four, it will have a different balance or balances, because again, if you go on and see the depreciation charts, it will be quite different. Alright, so thank you for watching the recorded lecture. Hope you learned something.